Okay, everybody, here we go. It's me, Gregory Mannarino. Monday. Lovely. May 6, 2024. Pre-market report. People, are you watching the debt market? I know you're watching the debt market. Forget the freaking stock market for a moment here, all right? Everyone's focused on the stock market, and it's beautiful and lovely. But the driver of this entire freak show is the debt market. Right now, there is an enormous amount of debt buying going on. Bond yields are dropping pretty much across the board. 10-year yield cratering. The MMRI continues to drop. That's from this morning. You and I, we just spoke about this over the weekend. To those of you that subscribe to my free newsletter, link in the description of this video, we spoke about this. We are going to see price action distortions get monumentally worse from here. Just the smell, just the taste of more easy money that's going to be pumped into this market by central banks. Again, the Swiss National Bank has already started doing this. The European Central Bank is going to be next, and then the Federal Reserve, and the market is getting off on this. Again, nothing matters anymore. Fundamental factors just, they don't exist. It's all about easy money propping up this stock market here and causing price action distortions to get even. What we are seeing today, in case you don't know, is a phenomenon that we've never seen before to this degree. Not even close. What I mean by that is the effect here of suppressed rates, easy money policies, currency devaluation by central banks, which really has been going on for quite a long time, but took a major leap forward during the meltdown of 2008. Okay, this phenomenon has created an environment of extremes. Cash has made its way into risk assets, the stock market, hyper bubble, real estate, cash coming out of assets it should be going into, for example, like commodities. Hey, let's have a little fun here, okay? This is the front page of Market Watch. The front page of Market Watch. Gold is overvalued. This is an article written by Mark Hulbert, who seems to think that you're an idiot. Okay, let's see. Mark, let's talk, Mark, for a moment. Do you realize, Mark, the guy that wrote this article, Mark Hulbert, that we are seeing global debt today surge higher at its fastest pace we've ever seen in history? There's been nothing like it. Being that debt is skyrocketing and it's not going to stop, you need to be in an anti-debt unit. Gold, Mark Hulbert just happens to be an anti-debt unit. There is in no way, shape, or form, Mark, that gold can be overvalued in this. Overvalued based against what? Against global debt. You can't just say it's overvalued. You can't just say that, Mark. You have to weigh it against something else. You have to weigh real wealth against anti-wealth, or debt versus anti-debt. Period. You can't look at it any other way here, Mark. And there is no way on this earth, off this earth, or anywhere else, that gold is overvalued today. In fact, I would go as far as to say it's probably one of the most undervalued assets on the planet, second only maybe to this, silver. Gold. This is where you need to be, people. Silver, actually, number one. Number two, commodities is where you need to be. People, look, you need to subscribe to my free newsletter. Okay, it's really free. Link in description of this video. I have put out 6 newsletters so far with regard to exchange traded funds, which will give you exposure to commodities. I personally believe right now couldn't possibly be a better time to invest in gold, which Mark says is overvalued. Propaganda. So you know it's completely the polar opposite. Silver, crude oil. You need exposure here to commodities, people. I don't know another way to put this. Period. The freaking end. Anyway, what we're seeing now is what you and I would have expected to see. Central banks, in this case the Fed, is directly intervening. There is no way that you can have this amount of debt buying if it's not by a central bank. It's not the average guy or the average girl buying all this debt. You can't have a simultaneous rally like this. Again, the rally in the stock market is being driven by bond yields that are dropping. All that does is open up a doorway for cash to make its way into risk assets. And it comes out of things like gold, Mark. You should know that, unfortunately. But this creates opportunity. When you have this kind of an environment here, artificially suppressed rates, obviously issues going on with currencies, central banks devaluing their currency. Where do you want to be? This is where you want to be, Mark, in gold. All of anyone who has even half a brain cell knows that. Anyway, but we're gonna leave that alone for now. So, speaking about easy money, this is another headline. This is CNBC. Stock futures rise. Yes, stock futures are higher across the board, as well as gold and silver, as well as cryptocurrencies, crude oil. So stock futures rise to start the week on hope of Fed rate cuts. Yes, and the ECB is going to be first. See what I wrote right there? ECB is going to be, leading the Fed because it's already been the Swiss National Bank here. So, but look, imagine my surprise. Imagine your surprise. No, we're not surprised at all. But I'll tell you something that's disturbing to me very, very, very. I run these little things here, and I send these to you. If you subscribe to this blog, you'll get these. So here's a question that I posed yesterday, and it's very, very sad in my view. So this is what I wrote. Lions and Friends, food prices are skyrocketing, and even the mainstream media is covering it. Just last week, we found out that restaurants in every major city in the United States are seeing a decrease in patronage. This is not a good thing. Here is my question. Is the rising cost of food impacting your lifestyle? 74% of you said yes, the rising cost of food is negatively impacting me and my lifestyle. Only 22%, and this is 4,000 people that were polled, 22% said no. So far they're able to cope with rising food prices. 4% said other. Okay. But 74% of you, and this breaks my heart to hear, are being negatively impacted by the rising cost of food. And I'm going to let you in on a little secret here, okay? The 22% of you that are not feeling the pinch so far, you're going to. Because we haven't seen anything yet with regard to inflation, with regard to currency devaluation, with regard to what central banks have in store for you and me. This is not going to stop, and it's not going to end well. Here's the question for this morning. Do you believe that there is even the slightest chance, that central banks are going to stop devaluing their currency? I hope you answered no, there is no chance at all. Otherwise, you really don't understand what's going on. You see, here's the mechanism you have to understand. The more that central banks devalue their currency, and they're all in a race to the bottom here, okay, the more currency they have to make up for it. Again, if I always talk about this chapstick. If the cost of this chapstick is whatever it is today, it takes X amount of dollars in this case to buy this thing of chapstick here. In the future, it will take more dollars to buy this as the currency continues to get devalued. So the central banks, and in this case the Fed, has to increase the amount of currency in circulation. You understand? It's very, very simple. Although, if you were to go to, let's say, the Fed's website or anything, it doesn't look like that at all. You see, people believe. There are some people who go to the Fed's website and look at these graphs and stuff and believe that these are real. They're not real. None of it is real. They can put any numbers they want on these things. It's all propaganda. It's all lies. It's all distractions. It's all distortions. But again, beautiful. You see stuff like this. Let me just go over this one more time because it's just an incredible thing. When you see that gold is overvalued according to the front page of Market Watch and Mark here, you do realize that this is where you need to be. When you hear a central banker tell you that gold and silver are not real money, that's how you know that's where you need to be. You understand? The mechanism here, people, is so absolutely disgusting. And what we're seeing here with regard to bond yields dropping like this is an incredible thing. Central banks are in the market, as they always are. Again, a central bank has no magical powers, people. No, they're not godlike entities. When they say they're going to keep rates at X, Y, Z, whatever it might be, they got to get into the market and make it happen. So in order for a central bank to keep rates low or keep them lower, They have to get into the market. They have to add digits to a screen and buy the debt. And this is massively inflationary. It's massively currency negative. So you tell me, or how about you all tell Mark, what's really going on here with this gold is overvalued thing? Got to be out of his freaking mind. People, look, this broke my heart. This thing broke my heart. I'm going to tell you again. It really did. To find out that 74% of you are feeling the pinch of rising food prices here, and they're not done. And they're going to try to tell us that, oh, prices are getting better. Inflation is coming down. It is not coming down. Inflation has done nothing but go up and up and up and up. Every single projection by the Federal Reserve has been wrong. How can it possibly be? Unless, of course, they're putting out information that they know to be wrong. I tell you, people, this stuff gets to me. It gets to me like you can't even believe. Anyway, increase your exposure to commodities. When you hear people like Mark tell you that gold is overvalued, you should laugh, and you probably are laughing. All right, because obviously this is propaganda, and they're gonna fist feed us rectally and everything else you can dream about. More stuff that's just completely false. But you and I were way too smart for that. All right, look, I'm going to let you go. Keep your eyes on the MMRI. It is dropping precipitously on the back of bond yields cratering right now. It's an astonishing situation that's being set up right now. And all this is going to lead to is a devastating climax. And it's by design. This is a setup here. You know that. This entire thing is eventually going to come down. Debt market is going to implode at one point. And they're hyperinflating it right now. This is a crisis here. Liquidity crisis, debt crisis, currency crisis, a world at war, multiple. That's how we roll these days here. You see, it's not you and me. It's our loving, caring representatives driving us, pile driving us into the ground at the behest of central banks. They don't work for you. None of them do. Not even a single person running for president right now. They don't work for you. No one's going to save you. Forget it, okay? We got each other's backs, and that's it. Understand where you are, and then a lot of things are going to become clear to you. All right, this guy here loves you a lot from the heart, people. Hope you got something out of this video. Please share the video. Get it out there. Comment on the things I spoke about here. Are we on the same page? That's what I want to know. Or not. I don't know what else to tell you. All right, I will see all of you later, 4 or 5 p.m. for my live stream, people. Until that time, take care of yourselves and take care of each other, okay?